Hello everyone, welcome back to Golden Dragon channel, and this video is about the analysis of Techcombank. And firstly, Mai Anh will present about an overview of Techcombank.
Techcombank was one of the first joint-stock commercial bank in Vietnam. It had a vision of becoming the best bank and leading enterprise in our country. Moreover, the bank had many services for customers, such as credit card, store value card for individuals, and deposit service payment account for business. Let's move into financial performance. First, we focus on the value of stock and PE ratio to find out whether Techcombank can maximize their shareholder wealth. Besides that, Techcombank had never had any legal scandal related to regulation, so that the bank had complied strictly to the rule and also had good comment from customers. Toward profitability ratio, in recent years, our increased because of 3 points. Firstly, the deposit concentration and increasing demand deposit strategy had raised CISA ratio. Secondly, the mixed asset structure of corporate bond and consumption loan bring high profit. Finally, the leading position in the capital market in terms of both issuance and distribution. Their interest income decreased due to the limited short-term capital for medium and long-term loan ratio, leading to the low net interest margin ratio in 2017. In 2018, Techcombank focused mainly on corporate bond instead of other loan methods. In 2019, they become one of the banks having the highest profitability ratio, and their net interest margin was improved. Techcombank net non-interest margin also had a similar trend to that of their net interest margin. Even though their non-interest income increased steadily, its growth could not lead to large change in the non-net interest margin ratio due to the significant rise in their earning assets over the period. Techcombank had an outstanding ROE compared to the average level. In 2017, ROE of the market was lowest and gradually improved by the next 2 years. But ROE of Techcombank reached a peak, then fell to a number nearly twice as much as the market. The ROE had shown signs of declining due to the huge addition in equity capital, leading Techcombank equity multiplier dropped by nearly 4% in 2018. In 2019, their equity multiplier grew a little amount, resulting in their ROE also having slight change. Now I will give some recommendations. Techcombank should pay attention to fund management efficiency, avoid diluting equity, as well as consider paying dividend to improve equity multiplier. Even though reducing equity and increasing liability lead to high risk, but banks should maintain leverage at approximately 10 times to get higher return. Carefully allocating assets to the highest yielding loan and investment while avoiding excessive risk to raise the average yield on assets.
In task 3 of our report, we conduct some analysis about the interest risk management of Techcombank. The first one, we talk about the overview of interest. Next, we have the assets and liability management, and then we talk about the derivatives. The overview of interest. Here we have the interest fluctuated quite significantly from 2017 to 2019, when in 2017 the interest decreased, and then in 2018 due to the high pressure of inflation rate it increased, and 1 year later it fell again. Now we mentioned about the risk management of the Techcombank. In assets and liability management, we have the dollar gap and the duration gap. The dollar gap of Techcombank was reported to be negative in the first year and then kept being positive in the 2 years later. The reasons for this change is that Techcombank rely on the movement of the interest creates the interest sensitive rates to keep their NIM always rising. About the duration gap, it is usually a positive number because Techcombank tends to lend in the short term, in the long term, and borrow in the short term. To avoid the interest rate risk in case of positive duration gap, Techcombank follow the directions of making asset duration greater than the liabilities durations. Now talk about the derivatives. You can see here Tech used two main swap contracts, currency and the interest rate swap. The figure for the currency swap transactions still on the highest value for all the time surveyed, and the quoted value during the period transactions rose. To recommend, Techcombank can predict the interest quite well by the two methods. However, we think Techcombank might prefer the dollar gap as the rest has some limitations. In conclusion, in this part, we mention two different methods and also give some recommendations for each of the methods.
Now we identify how Techcombank manage their capital. First, look at the Basel I standard. It can be seen that Techcombank risk-weighted asset increased over the last 3 years, and the reason is that the loans to private corporations increased, and also the amount of value of balance sheet activities increased dramatically, and then these things lead to the increase in total risk-weighted assets. And about the Tier 1 ratio, overall we can see that the core capital of Techcombank increased over years, and thanks to IPO in 2018, the charter capital of Techcombank increased significantly, and the retained earning grew 3 times over the last 3 years. Although the share premium reduced a little bit, but it didn't affect much to the increase in core capital of Techcombank. And these things lead to the ratio of Tier 1 always higher, about 2.5 to 4 times than the requirement of 4%. Looking at the supplemental capital of Techcombank, the main component of that is provision for loan losses. So when Techcombank adjusted PLL, the supplemental capital also fluctuated as well. But the change in supplemental capital cannot catch up with the increase in risk-weighted assets, so the Tier 2 ratio tended to decrease. Also, it still ensures the rules that Tier 2 over Tier 1 smaller than 1. So now let's look at the most important thing in Basel I is CAR. Even when the SBV decided to increase CAR to 9%, Techcombank's CAR not only meets the SBV requirements, but also higher than the average CAR of the whole banking system. Overall, Techcombank successfully met the standard of Basel I. And now we've moved to Basel II standard. In 2019, Techcombank becoming the 8th bank can apply Basel II thanks to the high CAR. In Basel II, there are 3 kinds of risks. It's credit risks, market risks, and operational risks. With different kinds of risks, Techcombank had different ways of management, but after all, they managed them very well. Overall, Techcombank or even SBV must always flexible in terms of new capital standard as Basel II. So how Techcombank meets their capital needs? With raising capital internally, Techcombank control capital by dividend policy. They usually change retention ratio to reach higher capital. With raising externally, in 2017, they offered to issue more shares to their shareholders. In 2018, they officially issued shares on Ho Chi Minh Stock Exchange, and in 2019, they issued a huge amount of bonds, and also Masan Group invested 20% equity to Techcombank.
Now, let's get to our last part of liquidity and lending management. First, let's talk about the liquidity indicator approach. In this case, we will only focus on the cash position indicator. After analyzing, we can see that during 2017 and 2018, the cash position indicator was quite high but still lower than 10%. Besides, the amount of deposits due from depository institutions was much higher than that of the vault cash. Therefore, the bank realized the problem and they tried to increase both vault cash and deposits. As a result, in 2019, the liquid indicator increased significantly and even reached 11.32%. Besides the bank's existing strategy, there are some recommendations so that the bank can improve the situations. They should limit the deposits so that they can increase their amount of bulk cash that they want to hold. The next part is a strategy for liquidity management. The first method is asset conversion, including primary reserve and secondary reserves. The primary reserves is the requirement of the State Bank of Vietnam so that the bank can maintain their cash stability. And the secondary reserves include balances with other credit institutions and available for sale securities. In general, from 2018 to 2019, the total assets of the bank increased significantly. However, there are some opportunity costs coming with the asset conversion, which is the trade-off between liquidity and profitability. Low risk, low return, future earnings decrease, and even the potential capital loss if interest rate increase. So in general, asset conversion may weaken the bank balance sheet appearance in general. The second method is a liability liquidity management, or in other words, the borrow liquidity management. They can choose to borrow whether from the State Bank of Vietnam or from other banks, but in fact, all of the banks may prefer borrowing from other banks so that they will be not strictly supervised by the State Bank of Vietnam. Another factor of liquidity liability is the certificate of deposits, which was completely cut off in 2019 so that the bank can focus more on other long-term valuable papers. So in general, liability liquidity management brings high return but also high risk, including the volatility of interest rate and the speed of credit available changes. After analyzing the liquidity management, there are some recommendations for both asset and liability liquidity management. Since each of the methods has their own strengths and weaknesses, the bank should use a mixture of both methods, and they should carefully measure the pros and cons of each method so that they can come up with the best mix of the two. Now let's get to the lending management. As we can see, the bank mainly lend to the individual customers and large business. During the period from 2017 to 2019, the amount of individual customers loans increased while the business loans decreased significantly so that the bank can focus more on home loan customers. For small and medium enterprises, the amount of loans increased steadily, and as a result, the total loans varies diversely due to the changes in its components as mentioned earlier. Now let's look at the non-performing loan ratios. Higher NPL ratio means higher risk in lending, and from 2018 to 2019, the amount of bad debts of Techcombank decreased significantly, and as a result, the NPL ratio decreased as well. In general, the bad debt ratio at Techcombank is very low, but the bank should maintain their current ratio or even reduce it to the minimum level.
This is the end of our video. It's just an overview about analysis of Techcombank. So if you want to know more detail, please carefully read our report. So thank you for watching, and 3, 2, 1, Golden Dragon! Goodbye!